Alison.
Chris, how's it going?
Yeah, pretty good, thanks. We are doing a short video on day trading to accompany our podcast, which went into all the nitty-gritty of day trading, and we thought we'd do this video just to run through a few of the rules of day trading. But before we do that, let's just jump into a little bit of what day trading is and how it differs to scalping. So although both trading styles do take place within one trading day, there are important differences that we need to highlight. Day traders open and close a lot fewer setups compared to the scalpers. Sometimes day traders will open one trade and then close it again on the same day, no more than that. But they usually don't do more than a couple, maybe three trades in a single day, unlike scalpers who are going to be doing, sometimes, a dozen.
Yeah. So basically, although they both trade intraday, the day trader's strategy is to look for the best opportunities of that day and then hold on for bigger profits. And essentially, the day trader holds on to a trade for several hours, but not usually more than one trading day. And the goal is to aim for a larger piece of the expected daily price movement within one trade, as opposed to the scalpers who will go in and out, many times over the trading day. So day traders basically like picking a side at the beginning of the day, then acting on that bias, and then finishing the day with either a profit or a loss. And they don't hold their trades overnight, unlike the positional traders.
Yeah, which is something we'll discuss a little later, I think. And so it's less time intensive than scalping. It's still more suited for Forex traders that have enough time throughout the day to analyze, execute, and monitor a trade. And also, like scalping, day traders rely heavily on technical analysis when executing trades. There's a lot of use of indicators, monitoring short-term price action, especially to identify optimal entry and exit positions. So if you think scalping is too fast, but you think positional trading or swing trading is a bit too slow, then day trading might be right for you.
Yeah, absolutely. So we put together 5 rules for day trading. And the first is the most obvious, something I just mentioned. Don't hold trades overnight. So day traders basically close their trades within the day. And this also means that they don't have to worry about overnight swap fees, or they don't have to worry about longer term trends. So this means that while fundamental analysis, of course, is important for any type of trading, the only impact it will really have is on the trade setups for that trading day and your planning possibly for the next planning day. So that's our first rule, is that day traders don't hold their trades overnight. The second rule is that you will need time in your day, possibly not as much as scalpers, but you'll have to still plan for your trading day, and then you'll have to find the right trade setups, and you will still have to monitor your positions throughout the day. And this can be quite consuming, especially for people who have full-time jobs. It's quite a balancing act, day trading and working. And our third rule is that, much like scalping, you'll have to have a very good understanding of technical analysis. So they are known for mixing different styles of analysis into their trading, and they often combine different types of indicators like the MACD, or the moving average convergence divergence indicator, and the RSI, relative strength index, and they combine these with price action and such as candlestick patterns for determining trends and support and resistance. And then sometimes they also add patterns like charts and wave patterns for a better understanding of the overall charts and price structure. So day traders actually, unlike the scalpers and the positional traders, they actually use a hell of a lot more indicators because they have to combine.
Yeah, they use a broader range.
Yeah.
There's a broader range of indicators to take into account. Yeah, exactly. And then our fourth rule is that you need to be patient. Day traders have to wait for the price to reach, a decision spot on the chart. The one that's going to offer the most potential profit in terms of an expected win percentage versus the expected size of the win. So patience is important when once you place your trade, and you have to sit there and you're going to have to wait, because unlike scalping, you're not going to close out your trade if the price moves against you. With day trading, you're going to hold on to that trade. You're going to hold on to it through drawdowns, and you have to trust in your technical analysis that the profit potential is going to be reached. And finally, for Rule 5, day traders must stick to their trading plan. You can't yield to the temptation of exiting a trade soon, before your trading plan tells you to, because then you're just becoming a scalper, and your trading plan goes out the window. Your mission is to find the most profitable buying and selling spot of a financial instrument within a single day. And then you buy and hold on to that target for a reasonable amount of time. And then you're going to drop it, and then you're going to get out. But you can't become a scalper, and you're not going to hold your trade longer overnight. Don't lose your trading plan in this. You're going to use leverage, of course, and it's part of this trading plan. But you're going to probably use lower levels of leverage because your profit targets are larger, and you're not scalping, you're not jumping in and out.
So we've also put another list together of good brokers for day trading. Generally, all brokers allow day trading. So it won't be a matter of, like the scalpers, whether or not a broker allows, not all brokers allow scalping and hedging, but all brokers allow day trading. So that makes it slightly easier. But our first thing is find a reliable and well-regulated broker. As you mentioned for the scalping video, Chris, it's better to look for a reputable broker, somebody who's big enough that you're not going to have an interruption to your trades. So that's a very important point. And obviously, if they're well regulated, you can be sure that your funds are saved. Then choose a broker with low trading fees. And this is less important, of course, than it is for scalpers, because obviously you're going to pay either the spread or a commission every time you open and close a trade. And because you're going to be open for sort of longer periods in the scalper, you won't be paying as much of your spread or commission to the broker, but it is still something to be aware of. But you're not going to have to worry about swap rates, which is another cost that accumulates because your trades will be closed before the end of the day. And then you're going to have to look at your market analysis. A lot of brokers have their own expert analysis teams, and they'll often send out morning alerts before the markets open with the latest news. And these will obviously inform your technical setups for the day.
Yeah, no, it's a really important one. Look for brokers with good market analysis. But also like scalping, you're going to want a broker with good technical tools. This is another thing you want to look for in your broker. We discussed Autochartist last week. It's also useful for day traders because Autochartist looks at multiple time frames. It'll look at longer time frames than just the 5 and 15. But there are other trading tools out there. Trading Central and TradingView do great indicators that are going to be very useful for day traders. And finally, the last thing I think when you're looking at a broker, and we mentioned with scalping that you really want a broker with a lot of CFDs. That's less important with day trading. You're going to want a broker as long as it has the CFDs that you want to trade. And if day traders tend to have favorites that they enjoy trading, and as long as your broker's got those and it hits these other points that we mentioned, then I think you'll be fine.
Yeah. So thanks for joining us today. As we always say, if you have any questions, please send them through to fxscouts.com or tradeforexsa.co.za. We are very happy to answer any questions you may have. And next week, we're going to touch on the last topic in our mini-series, longer-term trading strategies or positional or swing trading. So please stay tuned and again, send any comments or questions through to us and we'll get back to you.
All right. Thanks so much, Alison.
Yeah. Cheers. Thanks, Chris.
Bye.